Well, they have been. My watch collection has beaten every other asset class I have over the last 3 years. And so, the thing about Rolex, you should understand at the peak, before the crypto correction, because there's really interesting analogy between crypto prices and watch prices. And a lot of the buyers of the more eclectic brands are people that trade crypto. And so watch prices have corrected. This is a very unusual situation. I mark to market my portfolio every 24 hours. There's all kinds of technology now that gives you the last trade anywhere on earth of every piece made. So I have that technology and I track the values. And so the Rolex market, a good one to look at because it's so liquid and so large. They're the largest high brand watchmaker in the world. They make millions of units. It's down 28% from the high, but you're still up 40% had you bought the watch in retail. And today, you can't buy a Rolex at retail. There is no inventory anywhere on earth. And so the secondary market is where all this trading is occurring, and it's volatile. Yeah, there has been a movement to understand this at the political level and at the policymaker level, certainly on the Hill in Congress, where we do have some bills that are getting close to markup. The Stablecoin Transparency Act is the most interesting piece of legislature out there right now because it has bipartisan support in a very partisan market. And so we have the midterm elections in just over a week on the 8th, and we think that that bill will start to march its way into law after that midterm election occurs. And that just deals with stablecoin around US dollar. And so it'll be companies that are willing to go through the process of getting regulated that use the US dollar as the backup to their token. And USDC would be a good example of that. The reason it's got bipartisan support and the reason there's so much interest in it on both sides of the aisles is it makes the US dollar by default as a payment system, the world's default currency. Now, right now, the US dollar is used for energy. Obviously, a barrel of oil is traded in US dollars, but this changes the game. Yeah, you have that. However, I'd argue that this 75 basis point hike, which is 100% certain, is completely baked into all markets, the equity markets, the debt markets, the crypto markets. It's in there. What is not resolved yet, which everybody is waiting for, is what is the terminal rate the Fed is going to actually slow rate hikes or stop them altogether. And the reason there's optimism on that is you've seen the Canadians do this. They were supposed to raise 75 basis points. They only raised 50. And then the British are making noise about this, the Swiss, the French, other markets are starting to say, wait a second, we're going to slow down the pace of hikes. Now, the Fed has not jawboned that at all yet. However, the market is making the assumption that if every other economy is doing it, it's just a matter of time before the Fed does the same thing. And if we end up at a terminal rate of, let's say, 4.8, 4.9 or under 5%, that's still a historically very low rate. Now, it has rocked some markets. Housing is a good example. And, housing mortgages now are 7% for 30 years and higher. So that's going to slow that market down, which is actually what the Fed wants because housing shelters 40% of the CPI measure of inflation. It's a trailing indicator. It's a lagger. Well, let's take that question in two parts. Let's deal with crypto first, all right? And then we'll talk about the stock market. We can even talk about the bond market. I play in all three of them. The crypto market right now is really interesting, and here's why. This is one of the first years where everybody that trades crypto knows they're going to have to report. Let's say you're trading domestically in the US. You're going to have to report your gains or losses. And let's say you're like me and you have a lot of positions on. You've got 32 plus positions. Many of them are way underwater, but I don't want to give up my exposure to crypto. So what's going on my trading desk in our operating company right now is we're looking at every single project we're involved in. We're looking at the loss we could harvest. In other words, if I'm down 70% in helium or something, maybe I take that position, go back to USDC, then trade it into Bitcoin for the next 31 days, because that's the wash period, or 60 days, depending whatever your wash period is based on what your institution compliance says, or you individually have to comply to. Because if you're going to do that, you're going to get the tax loss benefit harvested in 2022 and still keep on a position in crypto. Now, here's the debate, because I just before we got on together was talking to my operating trading desk about this. There's an intrinsic assumption right now that Bitcoin is a good proxy for any crypto. It's really hard to see some project moving north of Bitcoin gains policy. The number one issue around crypto right now is policy. Number two issue, policy. Number three issue, policy. And I'll tell you why I say that. I represent and am very close to the indexing markets. I do indexes for sovereign wealth, pension, hedge funds, universities, endowments, all that. Let's say you're a very oil wealthy emirate in the United Arab Emirates and you make 250 million US dollars a day. That's not uncommon. Where do you put it? You put it into the S&P, X oil stocks, X airlines, because you already own those. And so indexers like me make those indices. When I talk to those people about what they're going to do in crypto, they would love to index 1 to 3%. I asked them, well, what would you want in that? They said, we'll just do Bitcoin. It's so correlated to all projects. We'll just do 1 to 3% in Bitcoin. They don't own any yet. None. Zero. For all the excitement about crypto, the real money, where 70% of the world's wealth is tied up in sovereign wealth and pension plans, owns zero crypto. If they could get their hands on it, they would buy Bitcoin, which is why it's so interesting. The Canadians have an ETF where the underlying is Bitcoin. They also have an ETF where the underlying is Ethereum. But the institutions won't buy it because their compliance departments do not allow them to own it because there's no policy in the US. So my whole investment thesis here is you go long Bitcoin and you wait, because you either have to do it after this policy, in which case you probably leaves 20 to 30% price appreciation on the table. All the idiot managers are gone, and that's a great thing. And I would argue that the industry is much stronger for it with the idiots gone.
Yep.
What you brought up there with Bitcoin miners, because the worst has not yet happened. Many of these miners got into contracts where they couldn't fund the purchase of stacks, machines. And so what they did when Bitcoin was up at $25,000 to $30,000 is agreed with contracts saying, if you lend me the machines, I'll pay you back on the awards with a floor of 25,000 or a floor of 27,000. Guaranteeing a Bitcoin price is an idiot manager. And so what happened there was now they're sitting with these contracts. They've got the stacks. They're being awarded coins, but they have to give them up at a price that's 20, 30, 40% higher than what Bitcoin's trading at. So they're effectively, every time they get awarded, on their way to bankruptcy. So you're going to see a lot of this happen, a lot of machines coming on the market. The prices have come way down on Bitmains and everything else. And we've got to flush out the idiot managers out of mining as well. And the other problem you got with mining is Larry Fink and the ESG mandates around just tying miners to the grid. You got to have hydroelectricity behind the grid, hydroelectricity or nuclear power. Those are the two that get you away from basically buying carbon credits. Everybody knows that carbon credits are bullshit, and the SEC is chasing that and forcing you, and they want in their latest memo. You can look at exactly what happened to the prices of Bitcoin miners that were public in the US stock exchanges the minute the SEC memo came out saying, we're going to get you to sign your carbon credit audits.